going to make sure that you walk away learning about an indicator that I'm sure you all have access to, but you're probably not using to its best ability, and see it in action in current market setups. This will include designated time for me to show you what the markets have been doing. It's Saturday, so now they're not moving, and we can look at them when they're still. So don't share them just yet, but keep in mind tickers that you would love for me to analyze live in front of you, okay? And I'll let you know when I'm ready for those. So how I trade momentum, RSI power zone setups in today's markets. Here we are, Webinar Expo, my first one. Excited to be here, and we'll get started. So important reminder that trading and investing can be extremely risky business, and therefore it's your responsibility to evaluate any information, opinion, advice, or other content contained in this session. What does that mean in plain old English? Well, how many new traders do we have here? New meaning, you know, you've been doing this for less than 6 months. Just type a 6 for me, please. If you've been trading for less than 6 months, I would consider that new still. You might be, you know, better than you thought you'd be at 6 months or not. Okay, not too many newbies. Okay, well, good to know. How many of you consider yourself experienced? You've been at this for a while. You can type in E for that, E for experienced. Yeah, I'm a very interactive speaker. I have you kind of jumping around the keyboard, but I promise not to do it constantly. There are breaks. All right. Well, like I said, this is a warning about the risks of trading, but I think more importantly, you need to take away the fact that the end of the day game, guys, is for you to preserve your capital, right? If you don't have money left in your account, you can't come back and trade the next day. So whatever I show you, no matter how good it looks, make sure you practice with it on a simulator, in a paper trading fashion, etc., before putting your hard-earned dollars and cents to work on these concepts, okay? So that's my fair warning that you need to practice, you need to apply these before you make them your own. So this is me right here, Hima Reddy, been studying, analyzing trading markets for over 17 years now. First learned about them from my dad when I was a teenager because he traded very actively on the side. And he was using technical analysis. But when I went to college in Indiana, I learned about fundamental analysis. And I didn't see anything like indicators or candles or any of that stuff. So I was like, Dad, what do I do? And we struck a deal that I could move home without a job and he would teach me trading. So, and I work part-time as well in all kinds of roles. So the first book, and I came back to Long Island here, the first book in this father-daughter grad school of trading was How to Make Profits Trading in Commodities by W.D. Gann. This book and this author had been in play for many, many years. Early 1900s is when this all came out, and the concepts had stood the test of time. And then from that, reading is only half the battle, right? You got to observe market action. And so my dad had me watch the E-mini S&P 500 futures 1-minute bar chart. On a 1-minute bar chart, no indicators, no moving averages, no nothing, and just stare at the chart and read the book and go back and forth. And this allowed me to learn the patterns and signals that Gann was talking about and start to be able to identify them on the screen. I realized that the more I did this, the more I'd be learning. And so I started making more graphic images, taking those words and translating them into images that I could recognize on my charts. I took things a step further and I started writing a newsletter for my dad. This was not part of my homework assignment. I just did it on my own. And I realized that if I prep ahead of the US market open, I might actually perform even better because by now he had funded my account and I was trading one lot, so one futures contract. I called this the skinny on the mini because it was the lowdown, the essence, the key points. And this report contained a lot of the techniques I still use today. So after I had that going for a while and realized it was helping my dad improve his trading, I decided to pursue the analyst route and I went and got my CMT designation and then I started working on Wall Street. And after starting my job in fixed income and FX, as you heard in my intro, people heard this unique story of mine that I was 16 years old, saw my first charts, and then was introduced via Gann, which is not the norm. So a publisher approached me and asked to write a book, not so much just about my experience, but with tips and tools for traders to be able to tackle Gann's complex works. And my book came out in 2012. I'm working on the second edition now, actually. It'll be published by Wiley later this year. But when you write a book in any field, suddenly your circle grows, right? So it wasn't just me and dear old dad. Now I had all these people kind of wanting to see the concepts in action, and my book readers, my webinar attendees, just like you here, my fellow technical analysis colleagues in Wall Street all started to come in and want to see concepts like the one I'm going to teach you today at work. And the skinny and the mini was a great way to do that. Life carried on. I eventually moved out of New York because I married my husband, this guy, who's from Wisconsin. And Wisconsin's next to Minnesota. Our careers took us to Minnesota, and between the jobs we had there and the Midwestern roots he had now embedded me with, I mean, I can't believe this is me wearing the t-shirt and eating the bratwurst and watching the Packers, right? I mean, this is a New York girl who never watched football before I met this guy. This led to me working in an investment bank and in a role that I thought I'd be in for years and years, and so I couldn't write the skinny and the mini anymore, right? Compliance won't allow that. So I had to go back to all the people who'd been getting it and say, sorry guys, this is gonna go. And they started telling me how sad they'd be to see it go. Remember, this was a free report. I want you all to think right now of any free report you've gotten in the past 2 days. Okay, I won't go more than 2 days because nobody remembers the email from 2 days ago. If any of those things went away, really, how sad would you be? I mean, maybe there are some valuable, but I had one after the other email coming in saying, oh, but I was using it for this and using it for that. And so I thought, all right, I'm gonna have to bring this back and figure that out. Now, life carried on. My husband and I actually moved back to my home state of New York for a while to Buffalo, and then we came to St. Louis this past year. Again, mostly because of his career changes, but joint decisions as a married couple, right? Now, in the move from Minnesota to Buffalo, I had to let go of that sell-side analyst position. And I thought I'd just pick up a new one because clearly, while I could trade and I enjoyed it, I was an analyst. Now in Buffalo, New York, I started to look for opportunities. I was all ready to go the corporate route again. And then 6 days after moving there, my dad died. And it was out of the blue, sudden. My mom was not well, to say the least. And I had 3 younger siblings all looking at me to take care of financial, legal matters, etc. So I had to pause my whole life, basically moved back home for 6 months because my awesome husband supported that move. And when I came back to my normal life, I realized I can't go the corporate route. I need to be flexible. I need to be control of my time. I need to be able to, be there for my family. And trading and embarking in the trading education business seemed like the best route. So I took the skinny and the mini, which, funny enough, was inspired by everything I learned from my dad. And I came back to everyone who had gotten previously. And I said, look, I want this to be the first product out there for me to help you improve your trading. And let's start with a subscription, $1 a day, legit. That's what I started with. And they started paying me for it. And this really blew my mind because, again, people had gotten this for free for years. Then it went away. And when it came back, they were willing to invest in it. That reassured me that the concepts I was putting in front of them were valuable. But they demanded more of me. And they said, we don't want to just hear about your newsletter and see your research every day. We want to learn these concepts so we can apply them to other markets. Because I had folks trading stocks and futures and ETFs and lots of other things that weren't just the ES. So I answered the call and I started creating educational courses. So that is my story. And I think this is important. I share it pretty much every time I get on the mic. Hopefully I change up the words here and there because I want you to understand not only why I'm unique, but why I have a valuable point of view and skill set for you. So if you're still here with me, if you missed the first sound check, everybody please type an S for skinny, S for my story, and then we're going to get into the content for our session. All right. I'm not sure if there's like a delay on the question box or if you all are just still sleepy because it's Saturday morning, but all right, thank you, appreciate it. All right. So first topic is this unique approach to indicator that you already have. Now the RSI you might recognize, but power zones is my unique application. And I'm going to walk you through the basics. If you've never seen it before, you're going to understand it totally after this, okay? So here we have a football field. I did say I am now a football fan. Here we've got the Green Bay Packers on one side of this 100-yard field, and then we'll have one of their rivals on the other side. Let's say the Chicago Bears. It's probably their biggest rival, right? Now these two teams have the same objective, no matter what direction they're moving in. When the Packers have the ball, they need to get to what's called their end zone. That's where you score points, okay? And the Bears, if they have the ball, they have to do the same thing but to the other side. Get through the Packers defense and get to the end zone. So the takeaway from this sharing of football is that nothing happens in the middle of the field. You've got to get to your zone. Remember that. Because now we're going to take this football field, flip it on its head, and put it down on a subchart with the RSI, like I mentioned. Okay. Now the relative strength index. How many of you have used the RSI? Please type in R for me. R for RSI. It is a very common indicator, so I wouldn't be surprised if a lot of R's come up on the screen here. But the Relative Strength Index was put out in 1978 by Wells Wilder, and he had a particular setting on it that we're not going to change. We're going to change everything else, but we're not going to change the 14-period setting, okay? The 14-period setting is based off the 28/29-day lunar cycle. I don't know about you, but I'm not going to like mess with the moon. And so we're going to leave this be because everything I show you, remember the word zones, is based on an RSI in a 14-period setting. So what does that mean? Well, let's just take this chart, which if you ever lose context of where we are in my slides, the top row will bring you back. So we've got the E-mini S&P 500 futures, my baby, right? Market I learned off of and still write research on. Continuous contract, if you're not a futures trader, what that means is that each E-mini contract is 3 months apart, and this chart is rolling to the active front month, okay? So right now, these more recent price bars are on the March 2019 contract. Daily chart, each candle represents 1 day, and the time frame. So look at this. This is through January 23rd. That's just past Tuesday. So this is a recent chart. Now, we're not going to change the 14, which means that every time the RSI calculates whatever time frame you use this on, it's going to consider the past 14 days of price action before making the RSI plot, okay? So if this is a 60-minute chart, you still leave 14 period. If it's a 5-minute chart, you still leave 14 period. This is so important that I need you to please type the number 14 as confirmation. You're not going to change that setting, okay? We're going to change everything else. But especially if you're new here today, please type a 14 for me, just a 1-4, and I'll know that you know we're keeping that setting. All right. Now, once you keep that 14-period setting, here is what you need to know that's traditional, and then we're going to change it up. When the RSI gets above 70, so this is upper black line, in any of your standard indicators, it will turn red. Oh. So what happens here is after it turns red, then suddenly your conditions are considered overbought and you're more likely to look for a sell signal. Okay, it's not a sell signal on its own. Do you guys see the issue back here? When we had the run up into early 2018, do you see how in that last leg higher, this indicator in this standard way would have had you getting bearish way before the top was formed? Too early, okay? Either you would have cut your profits because you would have gotten out of the long, or you would have attempted to sell short on any hint of weakness. Not a good idea. So this is one of the disadvantages of the traditional approach, is because it limits you to only trading around ranges, not with trends. The other traditional approach level is 30. Below 30 is oversold. And what happens here is that the indicator turns blue, and you can see back in February 2018, that was a fantastic signal. Yay for the traditional RSI. But what about in the recent price action? Well, we've been in a downtrend. These were corrective lows, right? Now, if you're trading intraday, there might have been short-term buy opportunities. But if you're doing any sort of like option plays tied to the ES, or using analysis of the ES to go analyze other markets that are closely related, oil, S&P 500 components, etc., this would have been information that would have gotten you falsely bullish, had you thinking that it's time to buy and this correction's over. So on its own, this is limiting, okay? So what do we do to make the most of this RSI field, right? 0 to 100, just like our football field. When it comes to using only the standard overbought, oversold, we're going to politely call BS here, okay? Remember the Bears. The Bears have to get to their end zone through the Packers defense to get to a place where they can make points. Either they kick the ball in, throw the ball in, right? Run the ball in. So now, guys, this is the point at which, at the end of this slide, you're going to want to take a screenshot or a photo. So get your gadgets ready, because this is the first piece of the RSI Power Zones puzzle. What is the RSI Power Zones? Well, it takes the 0 to 100 range and designates the parts of the field, if you will, for the bears and the bulls. So we're going to start with the bears. Okay, the market bears, remember, like the Chicago Bears, they live in the 55 to 65 area. What does that mean? That means when a market is trending down moving down, lower highs, lower lows, you will tend to see price highs forming when RSI reaches 55, 65, that range, not all the way up at 70. This makes sense because when a market is weak, it should get overbought at a lower parameter than if it was a sideways market or an up market. Okay, so that's the first of our 4 zones. Can you guys just confirm you can still hear me? Just type a 1 right now. There's a particular individual who seems to be having issues, so I can't confirm with him. But everybody else, if you can still hear me, see my screen, just please type a 1 real quick, or a yes, or a something. Okay, thank you, Bill, appreciate it. All right, I'm presuming we're all good. So everybody's got this first zone down, right? Look at how in this recent downtrend, there was 2 lower highs where the RSI did not make it up to 70. You can go double check on your own charts. Plot the continuous ES on TradeStation, that's at symbol CS, ES, excuse me, and a 14-period RSI, and you will see the same thing. So what would have happened is that if you were only using the traditional approach, you would have missed out on these sell signals opportunities if you were focused on momentum changes. Okay, but here with the power zones, you would have been clued in. Now let's look at the second zone. This is the bear support power zone. This is where a market will tend to become oversold when it's in price downtrend conditions. I'm fully aware that this includes the traditional 30 level. But guys, by having a whole cushion, a whole zone from 30 down to 20, trust me, it improves the likelihood that you will not try to stick your hand out and catch a falling knife, as my dad used to say, okay? Which means trying to buy a really sharp down move, like this one right here, okay? So these are 2 zones to keep an eye on in a bear market. Whether we're in a bear market now, still a debate, right? Got mixed signals going on, but either way, take a look at the ES. It has been respecting the bear zones since the fall. Until that changes, I'm expecting a chance for more downside. Maybe it's further upside first, but that's my broad view. Okay, coming back to the zones, make sure everyone's on the same page. These are the bear power zones, and now I'm going to take you to the bull power zones, okay? Now, when you're in a bull market, uptrending market, the RSI is likely to push up to 80 to 90 before it's considered truly overbought. Again, this makes sense when you kind of think through the logic. If a market's strong, bulls should take it up. They should be able to take it up to a higher condition of overbought before bears are really able to assert themselves. So what does this look like on our example here? Take a look, guys. Look at this blue highlight. Do you see how it's covering much less space on the chart than the previous standard overbought? This is like half the move. So what this is doing is still, yes, it would have been early to consider this overbought, okay, back in these early green bars here. But as the move extended, you realize it's in the bull resistance power zone. It's primed for a turn, but you still use price to confirm. I never, ever, ever just trade on momentum alone. I'm always using price to confirm. All right, so that's the third of our 4th zones. Now we go to the last one. The bull support power zone is from 40 to 50. This is where, in an uptrending market, you will tend to see the RSI become oversold and then turn higher. Okay, that's usually about as far as it'll go down. Let's look at our chart here. There's several examples of this in motion. So everybody bring your eyes back to the left side of this chart. Do you see that? There was this higher low into the end of the year where the RSI did not get down to 30. It just hung out near 40 to 50. Using RSI power zones would have given you a hint to either build your position, start a new position, etc. Then we had this massive consolidation. I'm sure everyone remembers. Once it broke out, though, there were 2 times along the way, just on the daily chart here, where the RSI coming into the bull support power zone would have clued you in to likely further upside prices. Here was one instance in the summer. Here was another, okay, late summer. Both of these were opportunities that you would not get with the traditional RSI. So all of this together, these 4 zones, are the indicator that I call RSI power zones. And now I'm going to move on to examples where you're going to see this in action on recent market activity, okay? So if you guys are ready for that, you understand the basics of the zones, please type a Z for me, Z for zones, while I get some water. Okay. So we've covered RSI power zones basics. Now we're moving on to RSI power zones in action, right? Actual examples here. RSI power zones can be used for analysis and signals on any active market in any time frame.
Sorry, I don't know that.
Alexa thought I was talking to her. That is hilarious. So, side note, I just got an Echo Show. And it's funny, just before I got on this webinar, I was like, should I unplug that? Is she going to respond to me? And she thought I was talking to her. That's funny. I'm glad I didn't accidentally order, diapers or something. Okay, bringing us back here. Everybody take a moment to look at the screen. Look at the left side, active markets. Look at the right side, time frames. Do you guys see a market that you trade or consider? Do you see a time frame that you trade or consider? Well, then I'm speaking your language here, right? I'm showing you stuff that is actually part of your trading world. So let's start with kind of the middle ground here, okay? Individual stock, daily time frame. This is something very common among stock traders, right? Who are doing swing analysis, or if you're doing intraday stock activity, like with options or something, you still are possibly looking at this for the daily chart. Okay. You know what? Actually, this is a good opportunity for me to know what you guys trade. What do you see off the screen that you trade? So I see Joe trades Forex. Bill, I know you, so I know what you trade. But everybody else, just type that asset class with that time frame that's speaking to you, because I want to make sure I'm actually putting examples in front of you that go with what you trade. And this will help me because I'll remember, for example, Joe trades Forex. So when we come around to the market analysis, which we're going to do soon, I can actually give you examples based on what you trade. Okay, Eloise, Forex, and futures. Nice. Okay. All right, I'm going to jot down a couple here. Go ahead, type them in. Well, I've got a lot of Forex traders here. So we got George, we got Chris, we got Harry. I got to remember that and walk through a lot of Forex with you. Okay, got Tom trading stocks. All right. We've got Virenderjeet, I think I said that right, trading commodities. Okay, I'm just going to call you Veer because I'm going to forget how to say your whole name. All right, cool. So this is helpful because then I have like buckets of things to look for. Now, I'm going to start with prepared examples, again, based on recent activity. And here we're going to start with Apple. Apple stock, okay, ticker AAPL. Again, I never know when I'm teaching who's new, who's not, who's, never traded, never looked at the markets before. So just in case you didn't know, ticker AAPL is Apple stock. And here's a daily chart. Now, look at the bottom left of the screen, RSI power zones. This is different than what I've had up to this point. Now I have the indicator itself in the way that I use it. I don't use shaded red and green. I use actual lines because then that allows me to focus on the RSI activity, okay? So right now, this RSI activity showing the RSI in a part of the RSI power zones, and here are the 4 actual zones. Now you will be able to, if you get access to my indicator, which is something I'll let you know about later this session, you will see the indicator plot the zones directly, but it doesn't say bull or bear. You just got to memorize that. Trust me, it's doesn't take you that long. The cool thing is because of the way that I shaded them or colored them, you can tell the green zones are the bull zones and the red zones are the bear zones. Okay, so here is the setup of our RSI power zones. Now let's go ahead and look at what Apple has been doing since the start of 2018. Okay, there was price breakout higher in the summer, early summer. Where was the RSI power zones before that price breakout higher? It held near the bull support power zone. Huh, kind of nifty, right? Not down at 30, but near the bull support power zone. Price continued higher, formed a higher swing low, meaning there was, and let's see, we're on GoToWebinar, which I'm very familiar with, so I can add a little extra color here. Higher high, higher low, right? That's the name of the game. That's what makes an uptrend. So here, there was the potential to form a higher low. It wasn't really confirmed yet, needed to break above this little level here, but excuse me, held near the bull support power zone again. From there, continued higher, and then we had, just based on this move right here, higher highs, higher lows, higher highs, higher lows, another attempt at a higher swing low. Look down below, guys. Where was the RSI holding and not falling below? The bull support power zone. So this is the first little side lesson where it's not just a matter of applying the indicator between big swings moves. You can do it even on these little pullbacks, okay? From there, we had new highs, big advance higher. RSI moved to the bull resistance power zone. So notice that it's basically flatlining in the bull support power zone, then it extended to the bull resistance power zone, just like price did, okay? Now, there was a new price high, but there was a disconnect between price and momentum. There's a cap near the bear resistance power zone. That in itself is a signal. It has different applications based off what power zone it's in, but for now, I can tell you it wasn't good news, and you all probably know that Apple weakened after that. But the price action afterwards itself told you that there might be a shift here because we broke a higher low, the key swing higher low, and look at what price and momentum were doing. Lower price high. What am I talking about? So we had this high, then we broke a low, then we had a lower price high, then we broke a low, lower price high, traded to new lows. So all of these guys right here are lower price highs with RSI capping near the bear resistance power zone. See, for the first time in this saga here, for what I showed you, this bear support, bull support power zone was not just holding on its own, and the bear resistance power zone was holding. This was actually having power over this market. This all shook out to what you see here. Very, very sharp fall. I remember this late, early December action. Everyone, I mean, I just felt like everyone except me was bullish on Apple. They were like, that's it. It pulled back. It's going to go higher. And I was like, Now, that's because I layered in other analysis tools that I use, and one of them objectively told me this down move is not over, and that was the right advice to my traders who took advantage of the move that resulted. But look at this overall, okay? Series of lower price highs. And again, I'm only going to be this detailed on this example because it's the first one. So I want to make sure everyone understands. The break of this low was the first hint of a change to a downtrend. Then there was this lower high, because then we broke this low. Lower high, broke a low. High, broke a low. Lower high, broke a low. I should sound like a broken record, but that's the point, guys. Those broken records where you can mark up like this, those are trends. Take advantage of them. Lower high, broke a low. Lower high, little bitty guy right here, broke a low. Now it's starting to get really close, right? Broke a low. Lower high, broke a low. So very cleanly here, you can see lower highs have not gone away. And until we break this lower high right here, Apple is not ready to buy yet. All right, for everybody who's here, whether you trade stocks or not, was that a helpful illustration to you? Please type in A for Apple if that helped you understand the RSI power zones better and you see how you can use them on your charts. Okay, especially those of you who are new. I need your participation to make sure I'm teaching you well. Okay, I'm going to start calling out names. Okay, thank you, Daniel. Thank you, More Than. I don't know if that's your name or that's just what you typed in the webinar. Very clever. Okay, thank you, Eloise. Thank you, George. Great. Now look where we came down to on this. Okay, thanks, Brent, Joe, Tom, awesome. So here we are, bear support power zone. That's where we deteriorated to. Is the show over just because this weakened to the bear support power zone? Not necessarily. It's just a clue that we might have reached oversold conditions, okay? Yes, Scott, I'm using Wilders. The question was, I saw it earlier, I think, and then I was distracted and I wasn't able to answer it, but that's okay. I'm glad you brought it up again. What kind of moving average am I using in RSI? I'm using Wilder's RSI, okay? So sometimes there's options to change that in your settings. And Arthur is saying, RSI power zone line appears to be a condensed version of the actual chart. Arthur, that's a very good observation because guess what? Momentum is calculated directly from price. So you're partly right. The thing is, because of all the other calculations that go into the RSI, it's not a direct translation. That's why there's a disconnect when you have higher high like this, but lower high like that, okay? So yes, momentum and price are designed to move together, but they're not always going to, but you can actually take advantage of that, okay? More than, that's your real name, you're from Myanmar, and that's where your name, cool, got it, I'm Indian, I know all about names that don't sound like their names, but they actually are, so, okay. Yes, Scott, makes a big difference, but I provide the RSI power zones indicator, and in those settings, it's obvious what I'm using, which is why I don't bring it up very much, but okay, guys, so here we are moving on to another example. Commodity on a monthly chart. Why? Number one, because I'm going to talk about a commodity that everyone knows about, everyone pays attention to. We all use it in our lives every day. And number two, on a monthly chart, this is an example of using this for bigger picture analysis. Whether you're a swing trader or a day trader, that bigger picture analysis is super important, okay? CL stands for NYMEX, WTI, light sweet crude oil futures, if anybody didn't know that. Now, here is the monthly chart. Just like on my ES example, I'm connecting each front month. If you're not trading futures, futures for oil have a new front month every single calendar month. So there's 12 in a year. So this is changing with each of them, okay? But let's look at this as a monthly price action. And let's look back down here. Strong advance higher, right? What did the RSI do? It moved from the bull support power zone to the bull resistance power zone. It did the same thing price did, and it did it on the part of the field that it was supposed to. This would have been an extremely helpful guide to any trading you were doing pertaining to oil. The thing is, trends change. So a question I get often is, all right, so does the RSI just like stay between the zones and then you just keep trading back and forth? No, because you can experience something like this, where there would have been clues on the shorter time frame, but on the monthly, it's just like a wipeout, right? And what happened? We broke a higher low. So actually should have had a line in here, but here we go. That happened. And when that happened, new price lows forming. Where did the RSI come down to? It did not come to the bull support power zone and chill out. It cleared that, ignored that, and came down to the bear support power zone. That would have been your first big picture clue, okay? In early 2009, that oil has shifted from the preceding uptrend, which was before this, okay? And that the picture might be different. And if you kept that in mind in your shorter term trading, whether it's swing trading or day trading, when all of this stuff unfolded, it wouldn't have been fun, okay? Nobody likes a sideways range, except when it's over and there's a breakout direction, okay? But what would have been useful to your analysis is observing that after breaking a price low and coming down to the bear support power zone, you would start to, once you get proficient with RSI power zones and you're using them a few times, keep your eyeballs on the bear resistance power zone. See, when you shift, you moved from the bull zone now to the bear zone, then you know the other part of the field to look at is the bear resistance zone. And guess what, guys? Every single one of these price highs landed in the bear resistance power zone on the oil monthly chart. Okay. Big clue that this big giant sideways range probably is going to resolve to the downside. Obviously, that's what happened. Now, when it happened, look at how we traded to the bear support power zone, had a brief recovery. See, so just getting oversold, it's not enough. But coming down again here, deep in, see how looking at just the 30 level would have gotten you super excited when you saw these oversold conditions and you'd be like, oh, it's over below 30, it's ripe for a buy. No. It can stay down between 20 to 30 for a long time if it's a really weak market. Okay, so we had new price lows and a fall to the bear support power zone again. Now things did shift. There was a more extended recovery, took a longer time. But again, just like I had your focus on this, look again at where when we traded from bear resistance to bear support, we keep our eyeballs where? On bear resistance. And it capped price action. I kept my traders in tune to this. And I was like, look, guys, there's not only past price resistance, but the RSI in the big picture is back in a zone where it's potentially going to be overbought for its current trend conditions. And we have a very sharp fall we're now recovering from. Okay, so that's the big picture view. So again, another example to show you how you can use this on your other time frames. So that added value, you understand RSI better, please type a C. C for crude oil. I've got 2 more prepared examples and plenty of time to go to TradeStation charts. Now we're going to go to an ETF on a weekly chart, again, just to mix it up. And I updated all these examples this week, okay? Special for my webinars this week. And when I did, it didn't take me very long to find examples because these things are happening all the time. So I have a question here. Are you using shorter time frames, like a 15-minute to enter long, even way before it goes, say, bullish on the daily? So yeah, Arthur, I have a whole 7-step approach that's in a course I teach, where it takes you from the first step of analyzing price and RSI power zones down to the last step of the trade. And multi-time frame analysis is key. Whether you're a day trader or a swing trader, that's all laid out in there. So yeah, I don't just go off one time frame. And you'll get information again about courses and stuff later on, but I want to make sure all are learning right now. Okay, thank you, Alan, Tom, Scott, HD, for confirming that the oil example helped reinforce your understanding. How about we look at SPY? I kind of think it as the SPY is like, I don't know, the grandma or something to my ES baby, okay? So here we've got an ETF, again, just to mix things up. Anybody trade ETFs here? I think you wrote that before, like Tom did earlier. But if you trade ETFs, please type that in for me again. Okay. This is very similar price action that like obviously mimics equity indices, right? But it still can be useful to RSI power zones. So let's look at this weekly chart. Each candle is 1 week of price action. Back in mid-2016, there was a breakout after a couple months of trading below key high. Price broke out higher, pulled back, went up again. So what I'm talking about is this. There was a breakout above this line here. Price rallied, price fell, and then it formed a tradable low for potential upside further, right? Now, when that occurred, where did the RSI hold? Bull support power zone. This was on a weekly chart. So you could use daily, 60-minute, etc. to refine and actually make your entry, but this would have given you a big picture clue that, hey, that was not just a false breakout higher, it might be continuing. Strong advance. RSI moves from bull support to bull resistance. You just saw this on the oil chart in the first set of slides. I drew the same arrows with the same type of language because you will see this often. And it will happen for downtrends too. But when you have a strong advance in price, don't be surprised if it neatly moves from the bull support power zone to the bull resistance power zone. Use that to your advantage, or use the likelihood of that to your advantage, I should say. Now, everybody look, we traded up to this high, then we had a very sharp correction. Ugh, yucky. Like 2 weeks worth of price action took out like 10 weeks, right? But in that sharp correction lower, look at where the RSI power zones are. We went from the bull resistance power zone down to the bull support power zone in like 2 weeks, 2 bars. Here we go. Bull resistance power zone, whoosh, bull support power zone, right? Still respected the zone. So there's not like a time minimum on this, okay? You've got to realize that, as Arthur pointed out, the connection here, momentum is derived from price. There's lots of funky calculations in it, but momentum is based off price. So momentum and price will often do things together. The key is that momentum can often be a heads up indicator. It can give you a clue as to what price might do before price does it. That's why it's valuable. After that, we have sideways range here. Everybody can see lower high, higher low. But look at in that sideways range after an uptrend, where did support hold on the RSI? In the bull support power zone. This was a clue that maybe the show's not over. We'd been in an uptrend. We don't have an official end of that uptrend. We just have a really sharp correction leading to a sideways range. Broke out higher. And from there, we had another instance here that was like what we saw in the Apple chart. A new price high, but cap near bear resistance. That was the beginning of the downfall that we saw. So again, guys, this shift, okay? We were between bull support, bull resistance, holding bull support, holding bull support, holding bull support, holding bull support, all through the uptrend, right? Then when this downtrend starts, there's a shift, and suddenly we're in the bear resistance and bear support, okay? So pay attention for those shifts. That is one of your biggest clues. Now, substantial price move lower. But even with all of that, it declined to the bear support power zone. It was holding just above it. So what my point is that when on the weekly chart, all of this was happening in the S&P or SPY ETF, right? Knowing that you're likely moving from the bear resistance power zone to the bear support power zone would have not gotten you caught up in these like little lows along the way. You would have been realizing, okay, looks like we're in a bear mode. Let's keep an eye on how oversold this can get before there's a true recovery. Okay. So if you guys are following here, I got one more prepared example, then we're gonna move to live charts. Please type in S for S&P. And I see some questions here. Trade with TD Ameritrade, Thinkorswim. Does the RSI indicator work on it? Yes, GP. So here's the deal. Excuse me. Before I created the indicator the way you see it, before I even like knew I could get things programmed, I was just so basic, if you will, on TradeStation. I just drew the lines. So every time I made a new price chart, I painstakingly drew 8 lines to cover the zones and deactivated the 70 and 30 lines. That got old real fast. And once I started teaching people, right, a few years ago, I was like, okay, I got to do better. And I went and I found a bunch of different programmers and I got this built. So I have it on about 10 platforms. And yes, Thinkorswim is one of them. There's also TradeStation, NinjaTrader, MetaTrader, and a bunch more. All right. Last prepared example. All you FX traders will be happy here. It's currency. Yay. Now it's on a 15-minute time frame. Again, for variety, and we're going to go to live charts for other examples. I'm going to move through this one a little speedier. Australian dollar, ticker, AUD, USD, Aussie, whatever you call it, okay? 15-minute. My God, these things move fast. Remember my story, my first job was an FX and fixed income analyst. I was a technical analyst on a desk providing short-term technical analysis to traders at institutions. And when things happen in the FX market, oh my God, I didn't know my fingers could type that fast, okay? These markets move fast, but they still respect the zones. That's what you're gonna see here. 15-minute chart of price action through this Tuesday, just captured to the prior, Wednesday or Thursday. So this is only so much staging that I could do. I just grabbed recent currency action. Everybody look at this price action. Huge 15-minute spike up, right? Strong price advance higher. RSI move from bull support to bull resistance. You're seeing this for the third time now that this happens quite often. After that spike, there was a pullback and price held at the bull support power zone, or excuse me, RSI held the bull support power zone. So your inclination would be, okay, we're going to resume higher. But then things shifted. And this, if you had made a long trade, okay, you would have probably had your stop below here, this potential higher low. And then once you got stopped out, that's the time to stop and reassess what's going on. Everybody bring your eyes down here. We went from the bull support to the bull resistance. Then we fell. Where did this lower high form and where did this new low form? There was continued price weakness, right? It persisted, and the RSI moved from the bear resistance zone to the bear support zone. That's the shift, guys. That's the momentum change that clues you in that price might be making a bigger change than what seems. Recovery higher, but on that recovery, we made a lower high. We didn't take out the original lower high. And I'm gonna highlight for you all the lower highs here. So first, this is a high, not a lower high. This is an initial lower high. Now we have another one. Cap at bear resistance. And it's not so looking so good, right? Well, then we had wiped out price low. Before doing that, we made a new lower high. So this is where the choppy intraday price action comes into play. Lower high threatens the low, but really the lower high's here. Recovery. So we broke this low, we broke this low. Lower price low, recovering from the bear support power zone. I think we've shifted. I don't think we should be buying anymore. Recovery to where? Lower price high seems to be forming. It's not officially done yet because it didn't go back below the latest higher price low within the swing, but it's a hint, and that hint is reinforced by the cap at the bear resistance power zone. Now we add another lower high, then break of a low to the mix. And then guess what? Lower high, break of a low. Lower high, break of a low. All these lower highs that came in after the one we just looked at came in with RSI in the bear resistance power zone on 15-minute chart. If you are trading 15-minute FX, do you think it'll help you out to keep an eye on this level in a downtrend? I would think so. I think this is a good indication of that. Either to add to your positions to make more short trades or to protect your profits. All right, so that was my last of my prepared examples, and now I'm going to take you to TradeStation charts. But first I want to know, did this help you out? Please type in A for Aussie, if you get it, that this is now on an intraday basis. You can still use this indicator. Okay, thank you, Bill. Thank you, Edward. Thank you, More Than. Thank you. Eloise, sweet. Now, we just finished RSI power zones in action. Now, I'm going to give you a secret sauce of how to master RSI power zones. And that is, to begin your formal education with me, you can grab a free copy of my ebook, The Winning RSI Playbook, at himareddy.com/expo. I'll go ahead and just type that in for you. I'm not sure if it'll come through here in the chat or here in the question box. So you can just click that link. It's a free ebook, but it will lead you to my paid materials, paid courses, paid ebooks on this topic. It's totally up to you whether you want to take them or not. But the free ebook that you see here, guys, reinforces everything I just showed you. And then you have a print copy. That's the only way you're going to get it. I don't share my slides, etc. But this is not over. It's only 12:46. I want to take your ticker requests, which please slowly type into the chat box, and I'm going to jot them down. I have my Post-it pad here. I do have the ones you all mentioned, markets you traded, but go ahead, drop your ticker requests in, and I'll keep this link up for you. This is for the webinar expo, so this lasts today. It will be gone tomorrow, okay? Ticker request live. Remember, whoever is as young at heart as me, but maybe not chronologically so young, remembers MTV when they actually played music. What a day, right? And Carson Daly hosted Ticker Request Live, and you could like call in, I think, and tell them what music video you want to see. It was great. So we are doing, Total Request Live. That was for the music videos. Ticker Request Live is what we're doing here. So we've got a whole 13 minutes, very lucky number there, for us to do that. So, all right, I tried typing in the link, but it's gonna be back on my screen, guys, so don't worry about it. My best here, superhero voice here, to the charts. And we're gonna go look at your markets. So there it is, there's the link, it's not going away. And I'm gonna take a moment here to bring my TradeStation charts over and just keep the link available for you for anyone who wants to grab it. Okay. So here I have on the left side a weekly bar chart with RSI power zones, and the right I have a daily candlestick chart. If your request is for a time frame different than what I have here, you need to put that in your request. But everybody stop typing your requests right now because I see a bunch here and I'm going to go through them sort of rapid fire. Ready? Okay, so GLD, I have prepped analysis and we're going to go ahead and look at that. On GLD, I've been keeping an eye, and on the weekly, we've been hovering around this old trend line, but my analysis suggested that we might not see too much resistance from it, and that seems to be the case. With the latest price action yesterday's session, we're breaking higher. That means that the support that I was watching here, January 4th low, is no longer the latest higher low. Now it's the January 23rd low. We had initially broken out from the bull support power zone, and it's still persisting. So I think GLD and all gold futures and all that is in good shape. And you can see my 3 resistance levels ahead on GLD. Okay, next. I see USO ETF. Okay, I'm gonna give that a whirl. Now guys, I'm a technician. So when I look at a chart, it doesn't take me long to come up. So you gotta pay close attention to get my analysis here. Weekly chart of USO, United States Oil Fund. Okay, so that gives me perspective on what this is. Just like oil futures, it's coming up out of the bear support power zone. Now, on the daily chart, excuse me, I've been like sick for all of January, and this cold is finally going away. It's insane. I hope anyone else who's had these weird colds going around this crazy winter is feeling better. So here we've got this old trend line that might end up being resistance, but right now we're recovering. But the key is on this, which is similar to the bigger picture oil world, unless we get above the December 7th high, I'm not too excited. Oil could pull back again, and oil related things like this ETF, okay? All right, I am looking through from here what you have from the top. RTY, sure, so mini Russell futures. Let's look at the weekly chart. Here it is, coming up out of the bear support power zone, recovering, but still below key resistance. And then here on the daily chart, I'm just taking a moment. This is me thinking. All right. Keep an eye on this lower high in the bigger picture, but right now we do have room for the upside. So the interesting thing was that the Russell, so the small cap stock, sort of led the downturn. This came in like a week or two before it did on the ES and the NQ. So if you trade any equity index futures, helpful hint, let's say you only trade the ES and the NQ, like what I provide in Skinny and the Mini, still take a look at the Mini Dow, YM, take a look at the Mini Russell like this here, okay? It will help give you perspective on when the shift might be happening. All right. So that's what I say about that. Now AZO. Let's go to the weekly chart. Okay. This is good for like a history lesson on the RSI, okay? So everybody take a look at this chart. Bull support power zone formed a low. Extended above the bull resistance power zone, formed a high. Here is a very important takeaway, guys. Anytime that the RSI is like, oh my God, I'm so overbought, like a rubber band stretched out, and needs to come back to its other conditions, doesn't necessarily mean the price trend is going to change, okay? And price is the king. Price rules don't do anything unless price is confirming it. So here, there was a pullback. So there was a, on a weekly chart, that was a tradable pullback, time to maybe take your profits. But look, price kept going higher. Well, that's too long. Let me shorten my line here. All RSI did was relieve itself of its overbought conditions while this market moved higher. See that, guys? So don't just say, oh, we're overbought, now it's time to sell and we're going to have this tradable down move. No, in that move to relieve itself of overbought conditions, there just may be a steady climb higher. Okay, more history on this, again, because it's a good example here. And you guys asked for it. Who asked for it? Brent asked for it here. Bull support, bull resistance, bull support, bull resistance. Then there was the shift, see? We started hanging out in the bear resistance power zone. Ooh. And then where did we fall to? Bear support power zone. Where are we now? More recently held the bull support power zone, broke to new highs. However, RSI did not break to new highs. So I'm a little sketchy on this. I would come in on the daily chart and look at some closer levels. So here we are. This is the key support here now to watch, this whole kind of zone, okay? These old highs and this, which are very close together. So this whole like 795 area, okay? That's what I say about AZL. All right, I got 6 more minutes. It was important for a history lesson, but let me see if everything that you guys typed in I can get through. You know, rapid fire here. All right, Twitter consolidating over old support on the, support, which is an old high in the weekly chart, daily chart. Let's see here. Interesting. So this is not like a formal tool I teach, but look how there was an RSI trend line, and now that trend line is violated, but now it's potentially acting, as resistance again. Okay, that might end up being useful, but right now, big picture, we're just in a sideways range. So unless and until Twitter busts out of $37, I'm not really excited about it. Okay, you asked about SMH. Okay, so this is another ETF, SMH. Semiconductors, okay, gives me some perspective. Recovering, but we're not above the early December high. So it's a very similar story to stock index world, unless you break above this high. I'm not excited about it. Why? Because take a look at where it's been since September. Bear resistance power zone, bear support, bear resistance, bear support. Okay. All right, so I've got 5 more minutes still. Excuse me, sorry. Joe says, try elderberry syrup or herbal capsules. I love elderberry, or is it elderflower? I don't know if it's the same thing. I'm at the point where I can sleep without NyQuil and I don't need to keep a tissue box near me, so whatever. The rest is just gonna fade out. My birthday is in February. As long as it's gone by then and I can properly celebrate, I'm good. AMRN. AMRN, interesting. This had a massive gap, pulling back, starting to recover again, but probably needs to get above some other resistance to really kind of rock and roll here. So what I mean is after this gap higher, we pull back, lower high, pulled back again, potentially lower high. We're in the bear resistance power zone, and everybody who ends up going and getting the ebook, and then if you decide to take the ebook and course after that, you're going to learn why I'm so focused in on this November 26 range. Very important resistance. Okay, so keep an eye on that November 26 range on AMRN. AMRN. Now let's go intraday. Let's go ESH19, and let's go hourly. Now you're going to still see the remnants of the 200-day moving average. I don't use it on the 60-minute chart, so just ignore it for now. I'm just trying to not change charts to keep our speed here. All right, so here we had a disconnect between price and momentum, prompted a recovery. I think that there's still a possibility that we retest this high, the 26.69, whatever this is, from January 18th, okay? But big picture, now, see, this is when you have to come in and look at the daily chart. Big picture in the daily chart, there's still potential to cap out in the bear resistance power zone. And on the daily chart, we're still below the 200-day exponential moving average. So I'm not as quite as excited about it. I see the time here. I think I got time for 2 more. All right, let me do some FX. I don't think I did many of those. A little variety for you all. Euro. So let's look at the weekly chart for everyone to get some perspective. Okay, big base here, broke out, pulled back. It's kind of hanging out. I don't know how much downside there is, but let's look at the daily chart. It's been nicely respecting those bear resistance zones and bear support zones for like forever. Feels like forever, since start of last year. Bear resistance capping at the lower highs, bear support holding the lower lows. Unless and until that changes, I would expect a return to this November 9th low. Although yesterday's price action gives us a chance for recovery to the January 10th range. Okay? All right. And I will do one more here. I'm going to try to do something that maybe everybody who's a FX trader is looking at. It's another major. All right. The pound. Yeah, so by the way, these are arrows left over from calls I made. I was bullish on the pound this week. I was bearish on the pound that week. It's just some leftover analysis. But what was important here, and this is something you're going to learn about if you decide to take the course that gets offered a couple steps after the ebook, is why I centered in on this resistance zone right here. But right now, if we get above the September 21st high for the pound, I'd get excited about it. And we're getting close to that. It's right here, because we're also finally starting to close above the 200-day exponential moving average. And for the first time in a while here, making efforts to get above the bear resistance power zone. But this is the level to watch, guys, September 21st or 20th, whichever is the high. Okay, it is time for me to hand over the mic. I appreciate your participation, guys. Hope you get yourself a copy of the ebook if you haven't already, and good luck to you in your trading. And I love getting feedback. So on your way, on my way out now, you're all staying in the room, but just type scale of 1 to 10, how you feel I did. Did I impart some knowledge to you? Do you think you can help this improve your trading? That would be a 10, okay? Anything less than that, I'll take as feedback to work on.